Hi, I'm Arnold van Dyk, Director of Tax Services at TaxAudit. And in this video series, we will be discussing different tax relief service options available. In today's video, we will be discussing IRS installment agreements. So let's start with the most simple type of IRS installment agreement. Let's say you owe the IRS anywhere between $1 and $10,000. There is a guarantee for taxpayers that the IRS will accept any installment agreement if it pays off the balance in 3 years or less. So any taxpayer can go online and set up an installment agreement by themselves with very little effort on the taxpayer's part. If you owe less than $50,000 through the IRS Fresh Start program, if you can pay off the balance within 6 years or less, that's 72 months, you can also just go online, propose an installment amount, and the IRS will most likely accept your IRS installment agreement. If you owe the IRS more than $50,000, here's where it starts getting a little trickier. The IRS is going to require you to fill out a collection information statement showing all your income, showing all your expenses. They're going to require you to submit all bank statements, all statements from any other accounts with equity, such as investment accounts, retirement accounts. They want to see the real property you own, any equity that you may have in any real estate or other assets. So it becomes a little more complex when you owe the IRS more than $50,000. Oftentimes, the IRS is going to try to set you up on the highest possible monthly amount because they want to make sure they get paid within the collection statute expiration date, which is generally 10 years. Now, if the IRS does not accept your installment agreement, you generally have appeal rights. What the IRS is going to try to do is, if you don't agree with them and they say, let's say they say you can pay $5,000 a month, and you disagree with the IRS, you believe you can only pay $1,000 a month, the IRS is going to try to take collection action, such as they're either going to file a tax lien against you, or they will try to levy you. But before they can take that action, the IRS needs to send you a notice of federal tax lien, or they would need to send you a final notice of intent to levy. In response to one of those two notices, you can file what's called a request for a collection due process hearing. And in the collection due process hearing, you're basically disputing the IRS collection action and you're proposing your alternative. Your case then gets assigned to appeals, and in appeals you can make another case. Even if you disagree with appeals, if you file a timely request for a collection due process hearing, if you receive one of those notices, then you can even petition the tax court if you disagree with the IRS. So very important to take the correct procedural steps when you're dealing with the IRS. And that's why I always advise, speak to a tax professional, especially if you have a balance of more than $50,000 and you don't believe you qualify for an offer in compromise or not collectible status, some type of other option. But if you believe that, generally speaking, people that make too much money to qualify for an offer in compromise, or they have monthly disposable income left, so they won't qualify for not collectible status, generally, if you owe more than $50,000, good thing to speak with a tax professional to make sure you protect yourself, first of all, against any IRS enforcement action, and to make sure that you are choosing the right alternative for you. If you have any questions, feel free to visit us or call us, visit our website, and you can also follow our YouTube playlist series on tax relief services offered. Thank you.